What's all this business about Goldbach levels?
Most ICT traders fail to make money because they don't know how to identify what the correct dealing range is. Dealing ranges aren't subjective. They are algorithmic. They aren't any swing high or swing low that breaks liquidity. They are time-based. Once you understand what the correct dealing range is, trading becomes so easy and the footprints of price are obvious. So let me run you through some key principles and then show you how you can start calculating the correct dealing ranges. So this price action from here to here, that is the correct dealing range. And I'll build it up for you. This is the dealing range high. This is the dealing range low. What is the job of the algorithm? The job of the algorithm is to buy in a discount and sell in a premium. What defines where the premium is? The equilibrium halfway between the high and the low. And what resides below every swing high and swing low? Liquidity. So this is the dealing range. Okay, this is the correct dealing range for this time frame. This is liquidity, which means sell stops originate here. What did the algorithm do? It swept this liquidity, so it bought in a discount, forced these people who were prematurely long out of their trades. It bought in a discount, and what does it need to do? It needs to sell in a premium. Where is the equilibrium? 50% of the range is the equilibrium. Let's make sure you guys can see this. This price at equilibrium is 103.463. What price did we end this previous week at? 103.463. Okay, this isn't a fluke, because what did the algorithm do? Bought in a discount to sell in a premium. Anything above here is a premium. Let's zoom in. What was it attacking? This fair value gap here on the weekly. The job of the algorithm is now complete. Bought in a discount, sold in a premium. How do you understand where the PDAs will form? You use a dynamic Goldbach fib. I call it the IPDA. If you are not familiar with Goldbach, then you can watch this video here and it will give you an introduction to Goldbach. And also, if you would like to understand how the basic indicator works when it comes to Goldbach, you can watch this video. So now, what does a Goldbach dealing range tell us? It tells us where the PDAs will form. We will have the rejection block here. So this is the dealing range, but it's important you know which time frame marries with which dealing range. So when we move down to the daily, things start to make sense. Look at this price action. The order block should form here. There is your daily order block. The fair value gap should form in the fair value gap partition. There is your fair value gap. What does algorithm 2 do? Moves from the low, it goes to a point called X, it retraces down to the fair value gap, and then it immediately shoots away. And the terminus of the algorithm is usually the bearish order block, which is here. Bearish order block. Then what did we have again? This is the fair value gap partition. high, retraced, tap the fair value partition. See, it tapped it here, and then we retrace down. Consolidation at equilibrium, hit our fair value gap again, the true fair value gap partition. Took off again. Okay, there's various algorithms that run. And then ultimately we hit the order block. The dealing ranges are defined by time. So what is this date? This is the 2nd of October 2023. This is the 3rd of July. Let me mark out the beginning and the end of the year. This is the beginning of 2023. This is the end of 2023. Therefore, this dealing range is the high of 2023 and the low of 2023. And look how precise it is. Sweep of liquidity, buying in a discount, selling in a premium, filling that fair value gap. If you would like to learn my time and price golden bullet strategy, which uses very advanced versions of Goldbach that I don't share anywhere else, there's a link to my mentorship below.